Hello traders and welcome to another video review. Today is Tuesday, June 28, 2022. Let's start with the Forex calendar review. What do we have here? As you can see, none of the important data had been released overnight. We got some speeches, of course, from the FOMC member, JFK member, and the Bank of England member. However, the key speeches today, because there isn't almost any data that are at least medium important scheduled for release today, we got plenty of speeches from the officials from the Eurozone, US, Great Britain, and the other members of the G7 summit. So please remember that during the day we can have a lot of comments, a lot of remarks regarding the overall situation of the economy, finance, and the other areas, the key areas that are being taken into the account by the G7 summit. So some of them might be market movers. From the data point of view, we got on the data from the US as usual: good trade balance, retail events in inventories. Then we got the Chicago board consumer confidence data scheduled for release at 4 p.m. We expect that drop from 106 to 104, and then at the end of the day we got the API weekly crude oil stock. So might be interesting day. The G7 summit is it will be here with us for the next couple of days. So please be prepared for this situation. That some remarks from some remote official of the Eurozone, US, the UK, or Germany, or whatever, might be a trigger for the rumor-based rally or sell-off on the financial markets. But first, let's just find out what is going on right now on the Australian dollar. Daily time frame chart of the Australian dollar is behaving very nicely. We retraced 50% of the last wave down, 7,068. Now we can remove our Fibonacci retracement levels from this chart. We have a short-term trend line violated, and as you can see, we might even say it's tested during the trading day of 24th of June, of course. However, it doesn't look like the market wants to go down really quickly. This channel is no longer needed here on the chart, because as you can see, we are now approaching the period of the low volatility, and the recent, for example, spread from high to low. Let me just find out. The spread from high to low yesterday was 6,961, 6,910, so that's 50 pips. Okay, so it's not that much. It's not a really nice trending day like we used to have just at the beginning of the June. We are approaching holiday season. We are approaching the summer holidays, spring break season, and there won't be that many market participants trading during the holidays. However, it doesn't matter that the things that will take place, the moves that will take place on the chart during the summer are not important. On the opposite, on the contrary, they are quite important. So low volatility period ahead of us on the Australian dollar right now, trading inside the range. Possibly the same situation will be with the New Zealand dollar, but here we can't even break above the above the trend line, of course, right? So market tried to bounce, made a new local low. This is on the level of 6,191. We got a bounce toward the technical resistance 6,379. Then we go down back on again. We are still trading below this trend line, and now there is no breakout. This is not valid breakout. This is like a consolidation play, consolidation whipsaw trading breakout, which is not valid, simply because there's an inside bar here. This one is the inside bar of this inside bar, which means low volatility trading environment. So please, again, be prepared for this kind of trading environment hitting us on summer. Right now, New Zealand dollar stays inside of the range, trading nowhere. What is going on then with the we got the gold yesterday? So let me find out what's going on with the SP 500. Of course, let's leave this dollars from New Zealand and Australia and find out whether our plan of the ABC corrective pattern is working. And it's working very well for now. From the lows of I think it's 3,000 and something, 3,000 and there you go. I can't see my my numbers. 3,635. This is the low. We got the bounce from the low, the end of the wave 5. Now this gap is covered. Very nice behavior. However, yesterday we got a pin bar here, so we might enter the wave B. Okay, so the high on the level of 3,888 might be the top for the wave A. We are now waiting for the wave B. For example, the level of 3,811 will be now a technical support for the price, so we can stay above this level and stay in order to, of course, bounce from it and then continue higher in the wave C towards 4,064, 4,109, 4,176. So one of these levels will be a target for the wave C. If we take into the account that the top for the wave A was made yesterday at 3,880. So that's our plan for the S&P 500. It might work. It's looking good, and because we completed ABC, big ABC pattern, higher degree ABC correction, this pattern here might still be labeled as 1 or A, 2 or B, 3 or C. So it might still be an impulsive wave to the upside development instead of just ABC to the upside. Okay, so please be aware of this fact. What's going on with the crude oil? Crude oil drop was very aggressive drop towards the lower channel line, but the low was made at 101.54. Since then we got a bounce, and then again we are in this zone where there are plenty of the old resistance, old supports. It doesn't actually matter that much anymore because there's too many of them. This zone looks very busy for market participants, so we will just make it a little bit more clear here, because now this level 101.54 is now technical support, local technical support outside the main channel. We should see the market reaction on 111.45 and then maybe at 116.62, but it looks like the market wants to go lower, and if we make a new low, local low below 101.54 and then 98.20, the top is in place. This is the failed top, and we might say that the crude oil is going lower towards the level of 93.61, 92.95. Okay, so please keep an eye on the crude oil behavior. It's very interesting. Right now, the first attempt to break below this lower channel line was a failure, despite the fact that we, of course, made a close out of the channel. However, 3 days in a row we are trending up, and the situation is still unclear However, the outlook is more bearish than bullish, because every time the market goes above 123, as you can see, is being pushed down, like here during the previous top making, and here during the last attempt to rally. So this is the crude oil. It doesn't look good. It looks on the opposite, kind of a weak spot silver market. What is going on here? We need to update our chart because all of these levels might be violated. However, please remember, this was our last ABC pattern, and right now we are done with this pattern. The market broke above this trend line. This of course breakout was a fake one on the silver. ABC to the upside done, and now we got this extension to the downside in 5 ways, ending with a new low at the level of, let me just point it out, 20.57. so market is still trending inside of the bearish zone below the level of 50. So this is that price action, and then as you can see, we didn't bounce much. 28, let me just put some of the lines here. 20, I think 22.40. there you go. This is the technical resistance, of course, right now, and all of these levels are the technical resistance as well. That might act as a support. However, it's old support, old important support, but now 21.64 is just another support we will be dealing with, and then this level is no longer valid as well. The market doesn't respect it anymore. So ABC pattern is gone. This is done. This is done. Blue long-term trend line is still the key trend line here on this daily time frame chart, and we should expect this market to go lower towards the level of 20 or even lower, because in the bigger time frame, if from the bigger point of view, this is still the chart that looks very weak. Let me just point out that there is as you can see 50% Fibonacci level, or even we will just put it here to this high. It doesn't actually matters, because we all know now that we are fighting for the level of the 50% Fibonacci retracement, 20.81. It was tested once, it was tested for the second time. If it won't hold that, we have a technical support 19.58 and 61% of the Fibonacci retracement of the last wave up, 18.65. outlook remains bearish. This blue trend line, let me just adjust the blue trend line. It's supposed to go just like this. So there you go. That's the outlook. This is our plan for the silver. We should see lower prices of silver if 50% of the Fibonacci retracement won't hold for long. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.